Hey guys, welcome to a new video of Bitcoin Edge. Today we'll have an interesting talk with Gutsareon and 52kskew. Hi Peter, how are you today?
Hey, thank you for having me. Yeah, I'm fine. I'm fine. Thanks. Yeah. Weather's fine. Summer is on. Yeah, all
Nice,
everything
nice.
fine. Yeah.
And 52, how are you?
Uh, I'm doing alright.
Okay, can you tell us a
Same old,
little?
same old.
Good, good.
Quarantine, can't do much. Yeah.
Can you tell us a little bit about yourself, Peter?
Yeah, sure. No problem. So I'm working in the filmmaking industry, filmmaking business. So I'd like and the end of the 90s and as a consultant, and I have a lot of free time over the day, a lot of spare time, and I'm trading TradFi, like for example Forex or equity index futures. Like maybe I started in the late 90s, I think.
Mm-hmm.
And pardon?
No, I was just
And
nodding,
in the
like.
yeah, in in around 2017, I started to watch Bitcoin, yeah, because at that time, as we know, this bull market started. We had the bull run,
Mm-hmm.
and I was watching this on the sideline, and I was thinking all the time, "Hey, this is really some some crazy market. There's
Mm-hmm.
some crazy stuff going on there." But I had no, I could not figure out how to access this market. So I trade on like my forex stuff and my equity index futures stuff. And then this must be early 2018, a guy on Twitter posted some screenshots from the BitMEX platform, the
Mm-hmm.
default platform. And I was hitting up this guy and I was saying, "Hey, what is this?" And he said, "Hey, this is BitMEX, the coolest thing under the sun, like sliced bread, so to speak." And he sent me a link, and I was opening up this link, saw this platform, and I was thinking to myself, "Wow, man, this is crazy." Yeah, you have an order book here, you have your price chart, and you have a time in sales.
Mm-hmm.
So this must be, what is this? Yeah, this must be a real exchange, or what is this? So I was totally confused because if you come from the TradFi world, then basically this is all separated. Yeah, you have exchanges, you have brokers, you have data feeds, you have um, all different entities, but this was all combined in one entity, and this
Mm-hmm.
was very, very astonishing for me at that time, to see this. Yeah,
Mm-hmm.
and I thought, okay, this is a new thing here. Yeah, this is a new kind of configuration, how to run an exchange and all this stuff. Yeah. Um, Then I opened an account, but with them, which was quite easy at that time, because you would just have to shoot them over an email address, and then you had your
Mm-hmm.
account. Yeah.
Mm-hmm.
Um,
Or in a
and
KYC at the
and
time.
there was no KYC, no nothing. And but next step was for me to then figure out, okay, how do I get some Bitcoin over
Mm-hmm.
there? And then I opened an account at Coinbase, at the
Oh
time,
yeah, yeah.
and and I transferred some euros, yeah, from my normal account, bank account, to
Mm-hmm.
Coinbase, swapped that to Bitcoin, yeah, and then transferred Bitcoin over to BitMEX. Yeah.
Yeah, yeah.
This is what they do the old way. I mean,
Mm-hmm.
everybody knows this, and this is basically my story how I got into crypto.
Mm-hmm. And what about you? Realized or 52?
Either one works.
Okay, sorry.
It's cool. Honestly, I only found out about like the whole crypto market and like trading and whatnot from like early 2019 onwards.
Mm-hmm.
So I think I bought on a local exchange here, Bitcoin, Ethereum, a few other like crap coins around when BTC was like 4 to 5K.
Mm-hmm.
So like on the whole, like run up to 14K, the throwback, and then like the mini consolidation bear market, whatnot.
Mm-hmm.
Yeah, and then
good time to buy, good entry.
yeah, it was pretty good. The bad part was overtrading on BitMEX.
Yeah, of course.
Like
Yeah.
typical retail coming
Yeah.
in to learn, oh, there's a thing called leverage. Oh, this is amazing. You can make millions and millions and millions from this like instrument, right?
Mm-hmm.
Which is true if you know how to do it right, and that's just degenerately compounding profits over time, right?
I mean, if you're compounding profits, you're doing very good. Majority is compounding losses or keeps depositing. That's
Yeah.
that's
Yeah.
Yeah. And I think it came into like the exchange war, which led later on from physically settled contracts. So like Quantro, which is BitMEX, I believe, which is settled in coin. So like you're trading physical BTC rather than stable coins. And that's like dangerous if you're investing in the asset and trading it, because like every time you make a mistake and lose, you're losing part of that investment rather than just using like USDC or USDT. Like Binance and BitMEX, the whole exchange war.
Yeah, it is a big difference. I see this.
yeah. And
Even in like funding and attributing those two strategies is interesting.
and Guts,
Yeah.
can you
Yeah.
can like what? How does your trading method look like? What does it look like? How has it evolved or evolved? How did you start out? How did you got interested in, like you said, forex first? Were you doing technical analysis, or what were you doing back then?
Yeah. That back then, I mean, these are the early days of Forex. Yeah, Forex got, Forex was closed circle, interbank market, at the time. But then there was this company, Oanda, called this, and they opened this Forex market to retail traders. But at that time, you only had price only charts. So you had no volume on this market. So everything was like TA, like of your typical kind of chart patterns. Yeah.
And
Income
guys,
indicators. No?
Goods is a little bit older than I think the average crypto trader.
Shit.
Look, what? Sorry. What year are we talking about
No.
when you were getting into it?
I mean, it's like the early 2000s, I would
Oh
say.
yeah.
I started out, discovering them. The whole access back at that time was a lot harder to manage. Like these days today. Yeah. So you had a lot more hurdles, and you had a lot stricter separation between professional trading on the one side, yeah, and let's say retail trading. There was a very strong barrier to this, yeah. And so as a retail trader, you only could basically trade if you are not that heavily capitalized. Yeah, you can only trade basically like the CFD markets, like maybe some stocks, maybe some equity index futures on the CME. Yeah, that was it about, and some warrants. Yeah, the special kind of instrument. And but there also were not that many resources out there for education and for material. So the one source I really had at that time was Linda Rushkey. So the Market Wizard. And you had these Market Wizard books, so you're reading Market Wizards, and you're checking. And the Linda Rushkey had one side where she puts up at that time charts with some comments on it, and you waiting every day about these new charts and reading them and and try basically these charts and these chart patterns that she presented in on her site, and try this out in Forex and so, but it's not really working out that great.
Yeah.
There were no micro contracts around at the time. Yeah, so you had the normal mini contracts, and it was not so easy if you if you were not that well capitalized, let's say,
Mm-hmm.
you know.
Mm-hmm.
And this was also interesting about crypto or Bitcoin markets and the derivative markets on Bitcoin. Yeah, I never traded spot or something really. I really only traded derivatives all the
Mm-hmm.
time, you know, on BitMEX. Yeah, so basically at that time, 2018, let's say, BitMEX was the leading exchange, volume wise,
Mm-hmm.
liquidity wise. Basically, they had. I don't think they had any real competition at that
No.
time, you know.
No.
Um, so BitMEX was basically my first love, and I think BitMEX will be my last one. I think also kind of.
Mm-hmm. Mm-hmm. Yeah, and how?
And I'm a day trader. Let's say this, yeah, maybe
Mm-hmm.
to put some perspective on it. So I don't care that much about higher time frame perspectives and outlooks, and so I really just I'm a day trader by heart. Let's say, you know, I like to start the day fresh, and I like to close out most of my trades at the end of the day, and I'm done, you know. And then next day I start all over again, you know.
Mm-hmm. Yeah. And do you have
Yeah.
You'd be
like
perfect for prop.
Pardon?
You'd be very perfect for prop trading.
Yeah, sure. But I never got approached for. I never. I never. I mean, okay, let's say it. I'm too old for prop trading. You know.
no, you're not.
Like,
You're not.
there's no age cap to skill and knowledge.
Yeah, but man, I I was listening to all the stories. Trader Dante, you know, is talking about how he ripped off CFD market makers and so. And I was always smiling when I heard the stories because I know what he's talking about. Maybe a lot of people don't even know what he's talking about. Yeah, like the CFD world back in the days and so. And
I mean, that's true.
yeah, so but I'm really a day trader at heart, and I'm the milestone for me, to say this quickly maybe, was when I discovered the order flow videos from Discovery Trading Group,
Oh yeah.
on YouTube. So and I post them on Twitter. So I have a link on Twitter for these old videos from 2010. And these order flow videos from these guys, they opened a new world for me, the world of order flow. Yeah, let's say, and they had three specific setups in this one video, and and I started to pick this up, and I started to see these setups in my charts, you know. So
Yeah, your famous mousetrap.
the mousetrap,
Yeah.
you say the infamous mousetrap setup. So this goes all back to these videos from these guys, you know, Rob and NJ, you know, and these are TradFi traders, yeah, old school TradFi traders. But you can apply these setups and order flow concepts very much to crypto, really, because these crypto exchanges are very much like all other exchanges, you know. But okay, I will stop here. Let's say, because
Mm-hmm.
I mean,
let's. I don't want to talk too long.
Yeah, I
Yeah,
realized, and sorry, never mind.
sorry.
How did your learning curve go at first?
bumpy, I'll say. So first learning what leverage is, right?
Mm-hmm.
Or even just derivatives contracts versus like spot.
Mm-hmm.
And then you have like all these different kinds of crypto markets. It's mania, man. It's like perfect casino,
Mm-hmm.
especially for like, a Zoomer, right? My age kind of
Mm-hmm.
group.
Mm-hmm.
We all want to gamble our paychecks, let's say. But you
Mm-hmm.
can do it in a way that makes you profit, which is like amazing, right? Rather than
Yeah.
betting on, I don't know, like sport. So 2019 was pretty much just figuring out like different kinds of strategies, which is like just simple ones like RSI, stochastic, which you can use for higher time frame confluence, which is like quite powerful. So that would be like a bull div on the awesome oscillator with like an RSI div that's pretty much you scale into a derivative position, or you can buy some spot. And then on the other side of that trade, you can play the mean reversion, which was like to the T in 2019. There was so many mean reversions. It was like bliss. And then 2020, post the COVID crash, which I took a very greedy short from about 7.5k, I think. -ish.
Oh, nice.
Yeah, it was pretty nice. One of the best plays I think I took, as well as longing degenerately on UVXY, and then took profits from that and did nothing for like weeks, I think. Let markets kind of settle out after, I mean, literally leverage got ripped from the market, same as liquidity. So like trading that, there was some really nice arbitrage opportunities, especially at the bottom around like 3.8k, I think it was on BitMEX, but spot was about 5k.
Yeah.
Some spot was imbalanced around 4.8, which is when you started to see like the tape literally print 1 million buys in Coinbase for hours straight, which personally I've never seen. Like that's pretty nuts.
Yeah.
And then from there, I met a few kind of quirky individuals or crackheads, Tryptamine and his crew. So I got into more what indicators are comprised of. So actually developing different kinds of trading strategies. And that's how I actually learned how to understand markets and how to trade from there onwards. Like to me, PA and trend lines and whatnot don't work. I'm more like systematic or algorithm driven. So like a wannabe quant, pretty much.
Yeah. Okay.
But I will say, anyone that wants to learn TA or what like SR is and all that is Crypto Cred. He has really good content, write-ups, videos, you name it.
Yeah, I agree. You can also, if you're at it, if you're subscribing, subscribe to this YouTube channel, of course. Just a little joke in between. No, I totally agree. CryptoCred is pretty good at it.
Yeah,
really good
I mean,
videos.
You know how to use trend lines and whatnot.
Yeah. I mean, for me, personally, like talking a little bit about myself, I like trend lines a lot. I like horizontals a lot as well. But the thing is, you have to look at it in combination with something. Let's say liquidity. If everybody and their mom is long, it won't pop up as much. If a trend line breaks, and the other way around, you need some squeeze in sort of way, or otherwise
That's
it's
100% true.
And in that manner, in that way, I think trend lines do work. But like you say, TA alone won't get you there.
No. You need a form of systematic approach, and that could literally just be using RSI and awesome oscillator as like some simple but clean, very profitable strategy.
Yeah. And I totally agree.
I agree.
I do like
You
I do
agree?
like horizontal lines or terms of invalidation, though. I think that's like very important.
Yeah.
And like volume profile, which Guts uses quite a bit, I think.
Do you use it a lot, Guts?
Trend lines, No,
Um,
horizontal. Yeah, I mean, horizontal trend lines. I use them a lot in the context of these volume profiles.
yeah,
And these so-called low volume nodes and high volume nodes, which is a concept basically from market back from market profile translated into volume profile, and then people made up concepts about also based on this what is called auction market theory stuff. I mean, I think we don't need to go down there, but this
No.
is what I use to just print out these what I call low volume nodes and or what are called low volume nodes and high volume nodes, and this gives me some reference points on the historical charts, to expect certain things have to happen. Let's say this.
Mm-hmm.
yeah. I can elaborate on that a little bit. So with like low volume and high volume nodes, if we give like a price to that, recently low volume would have been, let's say, 35K, right? Each time we went there in the previous range, it would be a pivotal point for the market, right? But you
Yeah,
get high
right.
volume nodes like 30K or 40K, right? And then these would be points where instruments tend to go into massive premium or backwardation. And if these conditions are met, then you can take a mean reversion type position.
Yeah.
And it's quite profitable.
Yeah. This is the concept behind these kind of trading, to get to these points. And what I also think also to mention here is that basically if you have these edges, kind of, these bigger edges, like 42K, for example, or down 30K, and so then this attracts also basically the whole spectrum of time frames. So by that I mean that you have really from the highest time frame onwards to the lowest time frames player that are coming into the market at these edges. Let's say, because everybody sees their trade, basically their risk reward ratio is extremely positive skewed at these edges. So you can get into a trade either playing a continuation or either playing some reversal trade with a very low risk, and you have potentially a very good reward situation. Yeah, in this
Yeah,
point.
absolutely.
Yeah.
Higher time frame players are typically low risk. They hate risk, but they want reward, easy reward, and liquidity. And if those conditions are met, then
Yeah.
they take a position. That's basically what I do,
Exactly.
honestly.
Yeah.
Mm-hmm.
So and the maybe the flip side to this is that you also have, of course, at these points, at these edges of these big ranges, you have a lot of volatility because a lot of players are coming into the market. So this is also a little bit of a dangerous playground for day traders. And you also have to be aware of the fact that can have very fast moves in both in either directions, basically, throughout the day. Yeah.
That's true. It usually plays around like standard deviations. Those based strategies, it becomes like heavily swung towards predatory trading
Yeah.
because all these algos, higher time frame ones like 6 hour, 12 hour, daily, weekly, they all close out of a previous position, whether it's long or short, and go the opposite way.
Yeah, exactly. Yeah.
Yeah, and then it becomes hunt the imbalance. In this recent case, it would have been Binance's very funny move to, what was it, like 48K
Yeah,
that week.
me and Goods talked about it this morning.
Oh my
Yeah.
goodness, this is crazy.
Did you tweet about that 52? Have you tweeted about that imbalance or something? Um, I'm recording on screen
I
on
might
your
have.
Twitter, so I'm
I
just
might
scrolling through your
have
tweets a little bit.
talked about it. I'm not sure if I said anything about it, but I mean, I kind of always knew that there would be a point where someone needs to take the offer of pushing the books in this, meaning the market was so delta imbalanced around 32K that the breakdown was solely led by derivative traders and not the size. So the big size was actually all in spot, which is exactly what you'd expect. And then what preceded was spot going into premium for the first time in like 2 months, since like May. And then that pretty much preceded by Alameda. And good old Alameda like to be the opposing side of the book, which I respect because I do the same. We both take predatory strategies. And in this case, it was buying long-dated calls, actually short-dated option calls, and buying long-dated futures, and as well as spot. And that was literally just enough to push the market into full bull tard mode. And then you have, everyone in Asia apparently just decides to buy the next day expiry, quite literally, of futures, like aping in millions, hundreds of millions of dollars. It was absolutely insane. And pretty much the Binance decides, this is high risk. So every time someone was shorting on their book, right, that adds huge tailwinds. And the risk with that is like ginormous. So then when price goes around 35K, which I think I spoke about a few times, that was pretty much certified that we would go to 40K. And 40K in options was heavily mispriced, meaning it was like stupidly cheap to hedge. It was very undervalued to buy calls, and someone eventually abused this, right? So they obviously profited heavily, and that's the beginning of the giant squeeze.
Yeah. This was just a perfect storm, let's say.
Literally.
Later on, there was this episode from Up Only TV where this guy, AV Fieldman or so, did come up from Block Tower Capital or whatever this shop is, and he was basically saying that, or in his opinion, he was also saying that this was just a picture-perfect sport and a picture-perfect constellation for initiating a short squeeze. So there are some bigger players out there, who spot these situations, and they just kickstart this kind of moves. Everybody is short, coming into 30K. And somebody has to pay the price in the end, and then you have these bigger players, let's call them Alameda and Co, who just play their games on these people. It's how it goes.
Definitely wasn't just Alameda.
The thing is, markets turn around, when people least expect it. We saw it at the top of these markets as well. The first time, we hit 58K, like fundings were extremely high. The second one, like the second leg up, was extremely high again as well. The extreme premiums, and the extreme fundings, basically tell you, like people are very bullish, and too many people are. There's no liquidity to the upside anymore. Everybody already bought, and that's basically when.
And in TradFi, they call this a crowded trade. So basically, when the ship leans to very heavily to one side, and everybody is in on one side of the market, basically. So this was at the top, everybody was long, and so the K bottom, everybody was short, and everybody was expecting the thing to go to 0 or to 10K or whatever people came up with, with numbers. and there was such a kind of a bad situation or a pessimistic outlook on the whole space and all this
Oh
shit.
yeah,
Yeah, so
it was
sentiment
extremely
was
bearish.
extremely negative. Yeah, everybody was bearish. Yeah, everybody shut out his links, his comments. Yeah, the thing would go to 10k, 5k, I don't know what shit. Yeah, and
Yeah,
and then the thing kicked in, which kicks in every time. Yeah, the market is size moves the market. So there are just some people who have the
smart money
capability.
retail,
Their
right?
smart money is that they have the account sizes, they have the size, the sheer size to just start to buy up this market, yeah, until they reach these price levels where the short stops are sit at, or where the short people that have big short positions, yeah, are forced to cover their short positions. No? And if when you have bigger short positions that need to be unwound or need to be covered and closed, yeah, then this does basically generate um, buy flow into the market. In addition to these people that trade breakouts to the upside, and these people that just hit into the market on the long side because they want to be long, you know. So
Yeah,
in this
everyone went
situation,
from scared to greed quite quickly.
yeah, so in this situation, you have three sources of buy flow. You have the people that are buying into the market because they want to be long, because they think they miss out, yeah. And the next people are the breakout traders who have their basically the entry buy stops above the market. And third group is these shorts who need to cover, you know. And in addition to this, usually you have, of course, let's say some sophisticated market makers or liquidity providers who just refuse to provide liquidity on the offer side, yeah, because they know they are on the wrong side of the market. Yeah, so they throttle down basically their liquidity providing, yeah, and this gives basically this
Perfect environment.
very extreme imbalance basically, yeah,
Yeah,
between flow and liquidity, and this is what basically leads to this pop, this massive run up. Suddenly, the sudden run up, and everybody was caught on the wrong side of the market. Yeah, and that's how it goes. Yeah, so it's the same story every time. Yeah,
yeah.
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 As the taker wins and the market makers lose bigly.
Yeah, if they get offside with the inventory and they are under trouble, then of course, or in trouble, of course, also because they quote both sides, and suddenly they are basically they're basically offside with the inventory, and they need to stop quoting one side, yeah, and more market makers stop quoting one side, yeah, because they are offside with the inventory, yeah, and this leaves, then you have this liquidity void kind of, yeah. So you
Yeah,
have
it's true.
really a little you don't need much buy volume to move the price up in this kind of situations. You know. At least this is my way how I see these movements. You
Yeah,
know.
and what do you guys think about the similarities between, well, this little consolidation below 40k basically we had, and the consolidation we had in 2018 November till, let's say, April 2nd, 2019. I sent a screenshot to in our Discord and circled it. Do you guys see any similarities? Because for me, at one point, yeah, we basically shut up when everybody was short for a very long time.
I think
Yeah.
on chart, sure, it looks kind of similar, even with like quite negative funding. Obviously not as negative compared to 2019, 2018. Simply
No,
because that was
the market was different
massive
back then.
capitulation.
Yeah.
Yeah, exactly. Market dynamic was different. Less money. and less money is, I guess, the prime point I'd make. So here, it's more difficult to move the market with substantial capital compared to back then.
But you can see that 6K floor so well. That was
Yeah,
that
I mean,
was very
obviously you
different.
can see in 2019 someone was buying that entire bottom. I remember there being massive BitFinex walls. On this bottom, someone had been buying persistently, which I was watching on my CVDs. So, like Coinbase Spot, Bitstamp, FTX, funny enough, was absorbing a lot of the sell pressure. So, from the market being in massive supply crisis, I mean, crisis shock, it went into crisis mode post the squeeze.
And what spot market is most important to you? What do you think? Like, okay, if this is buying, this exchange is buying, I'm becoming bullish. Do you look at it like that as well, or do you look at the whole of
I
it?
look at how Make is positioned mainly on Coinbase and Bitstamp, as well as
Bitstamp.
BitFinex, since typically,
Bitstamp is
funny
pretty
enough, I mean,
small, right? Volume-wise.
typically you'd think so, but there are some massive players on Bitstamp, and they may just buy in like increments of 100K per time, but they will do that over time. That ends up being massive exposure.
Okay.
But I'd say most importantly, definitely BitFinex and Coinbase. And now, obviously, FTX, since they're OTC.
Yeah, I was always paying attention a lot to Bitstamp in, what was it, 2019, 2018. I felt like people tried to dump the index of BitMEX through Bitstamp because the order books were not that thick.
They used to do it through Kraken and Bitstamp. That's true.
Yeah.
They would dump like 500 BTC randomly on Kraken. That would be enough to trigger whatever systematic algo is on Bitstamp. To just
but also,
like 100 BTC.
Also, like, you trigger the index price on for example, BitMEX, and people will get liquidated on the index price or stopped out on the index price, whatever, but liquidated as well. And that's how you get like a little bit of a cascade, and we back in the day we saw that a lot on BitMEX.
You did. Throughout 2019, you'd see that occasionally prior to massive liquidation moves.
Yeah. Interesting. And Guts, can you explain a little bit of what your charts are and how you look at it? I'm looking at your last tweet, by the way. This one, I think.
Last tweet. Okay.
So the tweet of 2 hours ago.
I tweet a lot over the day.
Yeah, but this I sent a tweet we're talking about in our Discord. So
okay.
You can click on it so you can see it.
Okay, Discord. I mean, I really am a day trader, like I said. So I don't look back very much, to be honest. Okay, I have some levels here and there, but I like for example, I don't compare, let's say, price action in 2021 to 2018 or come up with any kind of similarities or whatever. This is just not my time frame, So I try to stick to my time frame, and I try to shy away from these. Maybe try to get some longer term outlooks, because I don't want to break my head about what the market is in where the market is in 3 months or maybe 6 months or so. So I think that you have basically. You can have an outlook or vision maybe on a very long term outlook. Let's say 5 years, 10 years. I would think that crypto is higher at that point in time. And I have an outlook on a very short term time frame. But in the middle, I don't see for me any expertise or any kind of ambition or capabilities to make any kind of predictions or outlooks. I leave that to other guys. They are much more. There are guys much more called to do this kind of stuff than I am. It's just I don't see much of a sense in doing this. But this is really just my point of view. Yeah.
Yeah, but can you explain a little bit how you spot your
Sorry. Yeah.
perfect trade setup? Like, what is a trade setup you're like, okay, when this happens, I do this and this?
Yeah, sure. So what I like are trends. So I like very much what I call higher time frame trends. So this for me means trends on the 60-minute chart. So we have this right now, yeah, over the last couple of days or weeks. Yeah, we have this very nice uptrending market, and in such a market, I tend to look at pullbacks. So I want to catch the end of any pullback that is coming down from any local new high, And what I want to see is the market swinging down, 1, 2, 3 upswings, the downswings, I mean, and then it puts in this kind of mousetrap long setup. Yeah, so meaning that at that point you have basically the last sellers are coming into the market, the last shorts, the last FOMO sellers, the chasers, and these people usually get soaked up by passives, and then the market often turns around, puts in basically the pullback low, and goes on for the next leg up. This is my most favorite setup, or my most favorite. But of course, I also look for basically topping action like we had yesterday or today. So at the 47K area, so you could see that the market is kind of topping out here.
Yeah. Okay. So
sorry.
No, I have to interrupt you. So I
mean,
mean,
sure.
At a higher time frame, it was becoming pretty clear. The market was topping out a little bit. Are you saying you weren't looking at the higher time frame, looking at it yesterday, or?
I mean, I take a quick look at a higher time frame, which is for me. I have a 60-minute chart and I have a daily chart, and I take a quick look at this, and I see, for example, now it's pretty obvious that we are basically. Sorry, let's look at this. My chart here. So we are running into this. This is of course a very interesting spot. These 47K, because this is a very major low volume node on the 4-hour chart. So and I pay attention to this. So this is a spot or level where the market will either turn down quickly or it will break through and move on to the other side very quickly, usually.
Yeah.
And in this case, market turned down quickly, relatively speaking, because of this low volume node. Yeah.
Totally agree. Yeah.
And we also had this basically the second leg and this big upswing from 30K. You had this 30K, one leg up to. Sorry, I have to put on my pointer here. Cannot see that right now. Like 42K, first up leg, then the pullback, the 37 again, then the next up leg to 47. So this, and now you have the pullback, and I expect the pullback maybe to go to, I don't know, maybe 42.
Yeah,
maybe a little lower, and then put in this low, and then move on to the next up leg, which could bring us to maybe, let's say, 52K. But possible. Yeah, I don't know. I don't make this kind of predictions. I live day by day and swing by swing. No,
it's yeah, of course. But it's pretty funny, how everybody watches and acts upon.
Yeah, and I maybe I can add this to this. I'm not a sniper kind of trader, so I'm not a hunter. I don't stalk specific setups or specific situations. I'm more a collector, so I scale in and take some small profits on the way. Yeah, then I scale when the market comes down. I scale in again. So I try to collect some small gains over the day, over the week. You know, I'm not going out for this one big shot. You know, into the market. Yeah. It's not my style, you know. I'm more this kind of collector type of trader, if you want to call this way, you know.
Yeah, and
Yeah,
you're always
that's true.
using limit orders, or how do you like any other tips
Oh
and
no,
tricks? Or?
I use a mix. I trade on BitMEX exclusively, and I have to apologize. I only watch BitMEX exclusively. I don't watch any spot or any, and I rarely watch other exchanges, you know, because I think that everything that is happening on other exchanges is reflected in the activity of BitMEX. You know, you could take Binance, you could take FTX, you could take whatever. Yeah, for me, it is sufficient to watch this one market because this is the market I trade on. You know, so this is what is interesting for me, and basically to bring down my trading fees, I use a combination of limit order and market order. So I can then bring down my fees to 50 basis points. You know, because I pay the taker fee, which is extremely high, of course, and I get a rebate, so I'm down to 50 basis points, and I can live with that. This is at the current price level. This is something like maybe 20 points. So I need to cover. Basically, I need to cover. I need my trade to move 20 points or maybe to 30 points into my favor. Yeah, then I have covered my trading fees with that. You know, this is okay for me. You know. It would be harder if I would if I would basically market in and market out all the time. Yeah, then I would had 150 basis points. Yeah, and I would have to cover, I don't know, 60 points or something. You know,
Yeah.
trade. So these trading fees, we can talk about this if you want to talk about this. This is another topic I'm very spoken out about. These trading fees are just too high. Fuck you.
Yeah,
Bitcoin.
exactly. No. I mean
For
that.
Yeah, that's
for
true.
takers, I mean, yeah, for takers, of course, only, yeah.
Yeah, it's
Yeah.
So
expensive.
takers are at a disadvantage in this kind of on these exchanges, you know.
Yeah. I mean
Not
that's
all, but yeah.
but
Okay, sorry.
that's basically the reason why I only trade on BitMEX, Bitfinex, and Bybit, because you want those
Yeah,
rebates, you know, like
yeah, exactly. You want
like
to catch the rebates, yeah.
yeah, like adding it up, you know, like
And BitMEX and Bybit are the only one currently who have these rebates. You know,
yeah,
the other ones like Binance, okay, they have nominal lower fees, but they have for both you must pay for both sides. You know, FTX you also must pay for both sides. Yeah, on Deribit I think you have to take a fee. The maker fee is 0, and you have to take a fee of 50 basis points. So that would come out the same way a little bit, yeah. But Deribit is just, yeah. I mean, they're let's say they go with options, you know, their perps and all this stuff. They just don't have any volume there and any liquidity there anymore. This is my impression.
It seemed okay. I mean, it's more for
It's
like the
okay.
big guys
Yeah,
that scale in
yeah,
and out of
yeah,
futures
yeah.
based on their options
Yeah,
positioning.
but they have the 5 point spread now, not on Deribit. They have changed their
I haven't looked
tick
recently.
size. They have the they have changed the tick size to 5 points. And I mean, yeah, this is a little bit too much for me. Yeah. So I think 50 cent is okay. I think, yeah.
That could
Maybe
explain quite a bit of the recent market moves.
yeah,
They've been more aggressive,
I'm
especially
wrong
on Deribit.
on this. The last time I checked, let's say, they were at 5 points tick size. But I could be wrong. on this. So BitMEX
Oh,
has
you're right.
50 cents. BitMEX has 50 cents tick size. Binance has 1 cent tick size, which is also nuts on the other side. Yeah, this is the other extreme, man. I have a product which is trading at 50k, 40k, and have 1 cent tick size. This is for me also very strange, kind of. Yeah, this. Yeah, okay. What was the question? Sorry, I think I might have missed this. Hello?
No, somebody is
Sorry.
tagging you on Twitter, but
What? Me? Okay.
I don't know. I'm
Ooh,
just
famous
replying to him
guy.
right now, so I'm chilling already. I'm interviewing Goods right now.
Ah, so okay. Is this a live stream or what?
Yeah, no. This will come on later today.
Okay. Yeah. Uh, I mean, if I talk too fast, then tell me. It could be that people.
You're good. I do the same though.
Oh
You, like
wait,
really get
Oh,
into a
wait.
topic. Yeah.
I'll share it in our talk.
I use basically the so-called mousetrap setup. Yeah, and I can
Mhm.
share link then, and I can people find this description and all this explanation. All this stuff is on my Twitter account. I can share a link later on in
Yeah,
for your podcast.
I'll put the links all in the video,
Yeah,
of
exactly,
your
exactly.
Twitter and
Yeah,
the
okay.
one of Realized as well,
Yeah,
of course. We'll put in anything else you want to talk about as well. But this guy had a question about open interest, and
This is a special topic of mine.
yeah, so
Yeah.
maybe maybe if
No, I cannot.
not
You know,
yet.
no, I have did some research on open interest, and because I stumbled upon this guidance, yeah, to read open interest, and they always talk about, hey, open interest goes up or it goes down. What does this mean? Blah blah blah. And I was thinking to myself, okay, this is not the correct way to read open interest. This is my opinion, let's say. So, and I try to research this a little bit more in detail, yeah, because there's one interesting element about open interest, because the CME does not provide intraday real-time open interest, yeah, but these crypto exchanges, they do this. Exchanges like BitMEX and FTX and Bybit and Binance, they provide real-time intraday open interest data. So this is
Some
a
are
very unique.
delayed, but
So
like
yeah,
for
yeah, sure. I mean, sure. Some of it is delayed, some of it is snapshotting, and so on. Yeah, but
yeah,
in general, I would say, yeah. I mean, I'm getting at the contrast between the CME, which is basically the leading legacy TradFi exchange, who does not provide, does not
it's
feed
because
out.
regulation though.
Yeah, it
These
could be.
crypto exchanges don't have
Yeah.
the huge
But
bodies,
this
around
is
them.
some data, I think, that can be useful to filter out basically certain trades. And I'm investigating this now, researching a little bit better, and I want to bring out maybe a guide to read open interest, which I think is more useful for people, like these very generic kind of guidance you can find, in Investopedia and whatnot, But let's leave it with that for now, okay?
Yeah. Sure,
I gotta, I
Team
gotta talk
nine,
to
I
you
would
about
say
that
from the.
because I went in on this.
we,
Sounds
we
fun.
talked about this. Yeah, we talked about this
Mhm.
already. Yeah.
So
Yeah.
realized how do you spot your trades? We know of Goods, he looks for the mouse traps basically, looks for sellers at the bottom, and then reverses it. Is that right, Goods?
Yeah. I
In
look
short,
for
basically.
the late FOMO buyers or late FOMO sellers and the chasers
Mm-hmm.
coming to the market, and then they get absorbed because these people who play against these traders, they soak. I call it soaking. You know, it's it's a funny term I made of myself. I call it. So they absorb these kind of last players, less traders that come into the market, and then they trade against them, because these traders are then very quickly, when the market moves against them, then they are very quickly trapped in their trade, you know. And this sets up a certain kind of chain. Let's call it some chain reaction, you know. You can, which generates some very kind of, let's say, predictable kind of order flow activities, which you can exploit, to say this in a technical way. It's not nice. I have people that say, hey, this is scam. Yeah, this is a scam week again. Yeah, I got stopped out. I got liquidated. Whatever. Scam weeks are nothing but mousetraps in the end. Yeah. So and I say, okay, sorry. Yeah, this is, some people trade against you. If you buy the high or if you sell the low, then yeah, that's what's happening. Yeah.
Yeah,
Okay.
it's all about optimal positioning, really. Like what price are you looking to buy at, and do the market conditions support your buying thesis or shorting thesis? You know.
Yeah.
And you have these people who sell the low tick. Yeah, I mean, somebody has to do it. Yeah, let's face it.
Yeah, exactly. I mean, I do the same. Yeah.
They do need to give us their money, right?
Yeah.
I mean, no, it's not. I mean, there are breakout traders out there, but as a breakout trader, I only have a hit rate of maybe 10 to 20%, 30%. Yeah, at most, maybe 40%. Yeah. So the rest of my trades are scratches, or maybe I get stopped out. Yeah, and so I take basically the opposite side of these traders, you know. So I inversely, then my hit rate is, of course, the inverse of their hit rate, you know, if that makes sense, you know, of these breakout traders, you know.
Yeah, because you take the different trade.
Yeah, I take the
not the breakout trade.
Exactly, I take the anti-breakout trade.
When the noobs get trapped.
The failed breakout. It's a failed breakout trade. Let's say.
Yeah. Failed breakout, which becomes absorption and like a trap.
Yeah, it's a trap.
And by trap we mean bid and ask delta difference, which if you use Sierra, you can see that quite cleanly.
I mean, it's an ugly term, trap, but it's not, everybody listening to this, it's really not personal. Yeah, it's just
it is personal. It is personal. If you're if we're squeezing shorts, it is very personal. Always. This place is very emotional. No, I'm just joking.
It gets emotional. It gets to the people. Yeah,
the meme wars, you know.
Yeah. It gets under the skin. Yeah.
Stomping a little bit below the belt, you know, on Twitter.
And this is something you can observe with this called footprint chart or volume profile chart. You can observe this kind of activity relatively easy or relatively clear. Yeah, clearer than with pure price charts with some volume on them, you know. But
you can even just use, I use a lot of VWAPs. So like the daily VWAP, if you're an intraday trader, you can trade the break above and below that.
I mean,
I pretty good scalp ratio for that.
For mousetraps, you know, I basically look at index and derivative prices. I just compare them and I see, you know, when it is out of balance, you know, and then it's when I like to enter, you know, and they wick quite weirdly sometimes. So that's how I spot them. I don't use Sierra or EXO.
I mean, these setups are not my invention, so I picked them up from these old videos. Yeah, we talked about this from the trading group, and they they label these mousetrap setups. I mean, they come up with the name themselves. They're like a funny name.
Yeah.
Catchy name.
I just call it a
So
fake out or a stop run or
yeah, it's
like
a fake and shake pattern. Yeah,
yeah,
it's stop run, the market maker stop run trade.
yeah,
It's been around for as long as there are markets, basically. Yeah, this kind of
yeah,
trade. Yeah,
yeah. I just look at it as like everybody's sold already, you know, like time to revert, you know, or
yeah, exactly.
turn
Yeah,
around, go the other
yeah,
way. But realize
Well, yeah,
how
that's a delta imbalance in
yeah,
like my
yeah,
eyes.
yeah,
That's what I
exactly.
yeah,
Delta
primarily look
imbalance.
at.
Yeah,
yeah.
yeah,
And
you can look at this way. Yeah.
and do you look at those things as well, realized, or how do you look at it? What do you base your trades upon? Are you a higher time frame trader? Are you like goods, you know, only in the day, or what does it look like for you? But I don't know
For
that much about
me,
you. Yeah.
I don't really have. But I'm actually kind of like a macro guy,
Mm-hmm.
ironically, for like TradFi stuff, right?
Mm-hmm.
But when it comes to crypto, and actually trading, I don't have a time frame, if that makes sense. Like I will look at general trend based on like a daily and a weekly close, and then you typically will set up a range in which BTC likes to play chicken for how many days or weeks in that, right? If it is mean reverting or actually true trend in terms of just selling off or rallying, right?
Mm-hmm.
Then I would use VWAP systems just because it's very clean since it's respected by bigger players and algos. So you can then use that as defining what price is more likely or probable to do today or this week.
Mm-hmm.
And then for executing trades and taking positions, I'll look at the imbalances between spot futures, Binance in particular, since it's such huge size, such massive influence on the pricing of the market, and perpetuals. So an example would be you see a massive liquidation delta to longs being liquidated, and you see futures buying it up and perps is puking heavily, whereas spot is actually what we call, like Guts said, soaking the price. And that's simply there's a better risk to reward for buying here, right? And then covering later, which is hedging on perpetuals later at a higher price, where you have supporting funding. So it's at a premium rate. So you get paid to short while covering your spot exposure.
Mm-hmm.
So I mainly look at bid and ask imbalance, delta imbalance, liquidation delta, and the different CVDs between the different markets for whether I want to short or long, really.
Yeah, and then you mostly look at Bitstamp and Coinbase. That's for in your eyes the most important.
It's quite important. If Coinbase is in risk off mode, taking profits on recent investments, you don't want to be long on derivatives because that's going to be used to hedge people who bought spot.
I always look at I have this indicator, and probably you've seen it. I basically weigh everything against Coinbase, you know. And right now, Coinbase has like Coinbase is lower than Phoenix, BitMEX, and Bybit. That's how I look at it. And I look at Coinbase the most important. I didn't see Bitstamp that much, but yeah, I agree with you on Coinbase one.
Yeah. I mean, if we take the recent 2 days, using my CVD chart, which I have on my Twitter, you can see the leverage market, which is derivatives and futures, has been fading this entire move, while the ones buying and pushing price up is Binance Spot. So this is whoever is doing it on their book. This is dangerous for them because they're going to be offside probably by now, which means they have to cover heavily, which provides massive seller flow, especially on Binance futures. That's typically what Binance futures is always like a negative CVD.
Okay.
But when they become a positive CVD, it leads to these massive squeeze moves.
Okay.
Man, I wish I could trade like 42kskew. Yeah, I would. But I'm not good in synthesizing all this data, so I have to stick to my to my little mousetrap setup.
Funny question.
Uh,
Screen setups. Good. You have 2 screens, right?
You mean a hardware?
Yeah.
Yeah. I have 2 screens, one for Sierra charts, which I use, and one for entertainment, like Twitter and Discord and all this other stuff. Because you have to get a little bit of entertainment over the day, because otherwise, yeah, you are getting sour at some point.
Yeah. What about you, Realized?
I have 3 for the moment. I wish I had like 5 or 6 or something. Like not even joking, man. I wish I had like 6.
Yeah. I can see this.
But you can divide them up in different browsers, like different corners, or I don't know, chart setups.
On mine, like on my left, I'll have my BTC Aga one with different exchanges and that stuff. And then on the right, I have Ethereum, and then the middle, I usually have like more Delta focused stuff, or I use my VWAPs and whatnot to trade.
Interesting. And do you look at open interest or volume?
Open interest is definitely important. I mainly look at CVDs, but I am working on more refined open interest studies. Okay. So like Guts is researching at the moment, it's quite crucial to knowing which side of the book is like offside for our kind of strategies. So that would be price going down, and open interest is like giga chatting. That's when a lot of apes are sizing up and going into shorts. And then typically what you get is you get a point of breakdown. But if you get little breakdown and they're still aping in while spot's actually buying, that's when you get in. Because your position will be supported by a much bigger size, and these shorts have to close out, or they have to buy higher to cover.
Yeah, isn't it easy to see if you're like looking at premiums and discounts with open interest, so you see what's going on? Like compare derivatives versus spots, for example.
For higher time frame plays, yes, you can definitely see that. So like quarterly futures, typically the instrument would be used for hedging, especially on bigger premiums. So that's when it trades at like $3,000, $5,000 higher, or like an annual 20%. Basically, you're netting that off of your spot exposure. That's like a clean hedge, and we had that at 55 to 60K, which is pretty nice. But for intraday, I wouldn't say it's like directional. It can be quite biased, personally.
Yeah. Hey guys, we're at over an hour. Let's start a new video real quick.
Go down.
Crazy.
Yeah, we're at 1:08 right now.